First time home buyer plan in the new year for 2022. That's what we're going to talk about today. Before we get into all that, like, comment, subscribe, share, all that fun stuff, please, if you would. But let's go ahead and get right into it. So the three things I'm going to be looking at for your first time home buyer plan for the new year is your credit score, your money saved up, and then what I call your mental and emotional logistics. Basically getting you like in a head space and a heart space where you're ready to buy a house. Which we can help with those things personally, since like I'm a trained life coach and I've trained a lot of my people how to be life coaches to take on these mental and emotional transitions, beyond just the financial and physical side for real estate. So first one, let's get in your screens, in your credit score. I'm going to share my screen so I can use some visuals for showing you this stuff. So the first thing we're going to look at is your credit score and how it's broken down and where it comes from. Most of it is your payment history and your amounts owed. You want to know the quickest way to raise your credit score? Pay them people. That's the honest truth. If you got debts, you got money you owe, pay it, and your credit score is going to go up. I know there's a lot of people trying to find like sneaky, like suave ways to like get out of paying people their debts. Just pay your money up and you're good to go. Length of credit history is important, not as important, but usually it really comes down to like how long have you been paying and how good is your payment, and how good are you at paying your debts, essentially. Because if you don't do well with small debts and small amounts, you're not going to do well with large amounts and large things. So really it comes down to the discipline of making your payments, being financially sound on everything. Also, like your amounts owed is an important one, because what I've seen on this one is like people don't have credit, that's not necessarily bad, but there's no proof that you're good at making your payments. Essentially, credit scores are not a bad thing. It's not an evil system. It basically comes down to just how well are you making your payments and paying what's owed to you. New credit's a big thing. Account mix, that kind of has a factor. Length of credit history, but you can see if you total all those up, that's 35%. It's a third of it. The biggest piece is your payment history and the amounts owed. So if you got a low credit score, you need to fix some things. I get it. I've been there. People have been there before. This is how I learned about credit, was through going through my own credit counseling services. And that's one thing I'd have to say about any of those professional credit counseling services. Anything those companies do, you can do yourself. They just do it for you consistently. They follow up with the companies. They call them. They get reports removed. But honestly, all of that stuff you can do yourself. It's just the service that you're paying for them to do it. Don't sign up for one of those companies that just takes your money every month and just strings you along and your credit score doesn't go anywhere. Honestly, what you could do is talk to ourselves or the lender. Let me look at your credit report. Let the lender look at your credit report, and I will tell you what to do for free. And it's just a matter of you doing it from there on everything. So that's credit score. Pull your credit score and don't go to Credit Karma. Those places are not reliable sources. It might give you an idea, but really what you need is your credit actually pulled from a lender, which our lender does it for free. Janie Carr, Flat Branch Home Loans. It is a soft pull that she puts on there. If you go to janiecarr.com, show you this real quick. She's a local Wichita, got to type well. She's a local Wichita lender with a national company, so you get the best of both worlds. So you get the reliable local service from her, but then she has the power of a national lender, so she can give you good rates, more flexibility, things to go through like that. But when you type in janiecarr.com, you can go here to this Apply with Janie part. And when you go to this Apply with Janie part, you go through this whole process and fill everything out here. Put Ben Meyer and Team Home Hero in there for better rates and better service. That way it'll go to her, but it'll also go to me on everything. And from there, I can offer you more in-depth consulting on your credit and everything else to work on. But don't be scared of this link. Don't be scared of this process. Even if you don't talk to me or don't talk to us, you can go through this process, then talk to us. Or if you want to talk ahead of time, we're good with that too. But this isn't a scam link. It's a valid, reliable Wichita place to get your lending figured out and your credit figured out. Because right now, some people are thinking about buying a house in the new year, but we got to work on some credit. We got to save some money up, and we got to get prepared mentally and emotionally for this process. So these are just some resources for you for getting your credit score up. The other side of this is you got to get some money saved up. There are some 0% down products, and there are some ways that you can creatively structure and get into real estate, but honestly, I don't entirely recommend them just because they're not the best way to invest in real estate and to store your money in real estate. Because what you're really doing here is storing your money in your personal residence is what you're doing, because it appreciates at about 6 to 8% from an investment standpoint. That's okay. You know, there's other investments that can make 12 to 25% that are better, but it's not as crappy as a savings account at your bank that gives you like 1% at the most. And with inflation being where it's at, like really you're losing money when you're doing that. So that's why I consider your personal residence a storage account, a savings account, and somewhere where you want to put your cash for safekeeping is really where it's at. So a lot of people in Wichita and in Kansas do that. We're a pretty conservative state, and real estate's a really safe place to put our cash. So a lot of cash deals are done here. But I'm getting off on a tangent a little bit. So as far as money saved up, so if you want to compare like what your average rent is to what kind of house you could get, one of the lowest options possible with a low credit score is FHA. And the money you want to save up for FHA is 3.5% down on like a $145,000 house. To give you an example, it's $5,075. You can go to this mortgage calculator on Janie's website. It's a pretty good idea to get you where you're at on everything. So you want to be saving up for your down payment, but then also what we call closing costs. And this word closing costs is a widely misunderstood term because a lot of people use it interchangeably for a lot of different things. But what you want to really break down and understand is, what does that mean? What does that go towards? Because usually people say closing costs, but what they're really referring to is this lender funding fee, but then also prepaids, impounds, reserves, et cetera, all the cash costs essentially that are required to originate a loan. Part of that is the lender's funding fee. Part of that is just different things that they require up front in order to write the loan. Sometimes the seller can help pay for those. In this competitive market, we're not seeing that happen as often. And this funding fee was shown on our website. It's typically not $24.49. Usually it's closer to $1,000. But then to prepare on a house of this size, you're probably looking at $4,000 to $5,000 total in closing costs to go with the 3% interest rate. And that's assuming 3% interest rate, $1,500 a year in insurance, and $1,500 in property taxes. But that would give you a monthly payment about $951.10 on everything, principal and interest. And then anything below 20% down, you're going to have to put down what's called mortgage insurance. Federal government requires it. And if you're going to put anything less than 20% down, I highly recommend you go with the minimum amount down, because it's not your cash that appreciates in the house. It's the value of the house itself, the asset, that goes up in value. So it's not your cash that's appreciating, it's the house and the location that's appreciating. So with that being said, my attitude is you put as little cash down when you're starting out into your house, let the equity grow, build it, and then in 3 to 5 years, when you have enough equity to sell, you can sell, move to a bigger one, roll all that equity over to the next house and put 20% down there when you go to that one. So FHA is a really good product to get into a house, get yourself going into a house. And really the sooner you start, the better as a first-time home buyer. But we got to save up some money. We got to save up money for down payment, save up money for closing costs. So like in this example, we're looking at about $9 to 10 grand is what we're looking at saving up for. You also have to save up for putting earnest money down, which would be like $1,000 on this one. Inspection costs, which can be anywhere from $225 to $500, depending on how much you're looking at there. Appraisal costs about $450. So, right there's about another $2 grand of cash outlays that you want to expect. Not to mention, hiring movers, additional costs like that. So I really want you to be financially prepared for this if it's something you're looking at for 2022 ahead of time. So that's some of the money you need to get saved up. Another way that you can look at this is if you go on our website, wichitahomebuyer.com/buy-a-home, and you scroll down to the bottom, which there's a bunch of resources on here. Scroll down to the bottom, you can go off of an affordability calculator, and you'd be surprised how much loan and house you can get for not having to make that much money. It just depends on what's called your DTI, your debt to income ratio. So like if your income's $75,000, you have like $10,000 to put down, like we were kind of just referring to, and no other monthly debts, which I'd be surprised if you didn't, because this includes like your car payment, student loan payments, medical debt, any other debt like that that you have outstanding. Again, no judgment there. It's just something that we got to assess and look at. You could more than likely afford up to 514,000, and your debt to income ratio is still 36%. The most allowable, depending on the lender, is 45 to 55%, although I don't recommend it over a long-term period. I recommend keeping your debt to income ratio at 25% or lower total, for all your debts, including your house payment, which typically means one of two things, like don't go over leveraging yourself financially, but also make more money. But I'm not a Dave Ramsey style guy either, where I'm like, hey, just pay everything off. No debt. Debt is bad. I think that's foolish and fear-based, but we're not going to get in too much into that. But this is another way to figure it up. If you go, hey, I make 50 grand a year, 75 grand a year, how much house can I afford? But one question you really want to ask yourself though too is like, what monthly payment do I want to stay around, and how can I get around there? What am I comfortable with there? And then the third one to get through is basically the mental and emotional logistics of how this works, everything that goes with it all. So if you go to our website, wichitahomehero.com, we have a lot of resources on here for understanding how to buy a home. So if you go to buy/build, how do I buy a home, click on this. There's several different nuggets or pieces of information depending on how deep and detailed you want to get. Here's our process for setting up financing, kind of like what we've talked about here. Consultant tour homes, both online and person, offers, inspections, appraisal, underwriting, closing day. But all this education is designed to help you mentally and emotionally wrap your head around buying a house, how the process works. And then of course, we're here for your personalized direct questions, consulting, customization of everything. But all of these resources should help you to get a better idea of how it works, what you can find, all of this type of thing. So this is one thing we provide at our website and locally here at Team Home Hero is just way more value beyond just houses. We start with houses, but we know you're going to need more than that. And whenever you're ready to talk, we're ready to talk too. We're not there to, hound you and pound you, but if you are ready for work service right away, like we're there, we want to make sure we're there. But also we don't want to bother and spam you and annoy you. So if you just work with us, we'll work with you. We're not your typical salespeople that are going to just like beat you into sale type of thing. So hopefully this has helped you learn a little bit more for having a first-time home buyer plan for 2022 and really beyond that. Starting right now is a really good time. Work on your credit, work on saving up your money, and work on being mentally and emotionally ready to go for when the time comes around. So appreciate you watching. Like, comment, subscribe, share all that fun stuff. Reach out to me directly if you'd like more direct advice, and hopefully talk to you soon. See ya.